If this is what management is focusing on, that makes me concerned. All right, everybody, welcome back to the channel. Can You Do Any Better Investing? Part of the Can You Do Any Better network. This is an educational channel. We talk about all things investing. If you like our videos, please smash the like button, hit the subscribe button, and ring the bell for notifications so that you don't miss any of our videos. I am Tom. I am not a financial advisor, and this is not financial advice. And today I want to talk to you about a company named Romeo Power, stock ticker RMO. This one is a confusing one. So I've got some good news and some bad news on this one. I'm going to go through the bad news first, and it's going to sound like a lot of bad news. But stick to the end of the video because there is some good news, and I'm going to tell you how I'm playing this one. And I think there's some potential here, in my opinion. So let's get going. Let's talk about what's going on with them. So Romeo Power, powering the world's transition to electrification. What Romeo Power does is provide batteries for commercial trucks. They're in the fuel cell business. Their big problem is back on March 30th, they released their fourth quarter 2020 financial results. And in that release, they did a conference call where they mentioned that they are out of fuel cells. So that is their core product. For a company that provides batteries, to be out of fuel cells is a big problem. In addition to that, they adjusted their forecasted revenue. So they announced, this one was pretty drastic. They actually had to reduce their projected revenue for this year, 2021. They were projecting $140 million in revenue, and they adjusted that down to an $18 million to $40 million range. That's a 70 or 80% reduction in their estimated revenue for the current year, along with the news that they can't find any fuel cells to buy. Now, they reassured that they're working on solving that problem. But naturally, their stock took a pretty big hit on that news. So a few days later, about 1 week later, they put out this press release. Romeo Power and PACCAR enter long-term supply agreement for Peterbilt 579 and 520 battery electric vehicles. So this is a super strong relationship. These guys are a $20 billion company. They're a leader in the commercial trucking industry, and to have an agreement with them was very reassuring to investors. So when we go look at the chart, mark that date, April 6th, you're going to see there was a very nice reaction to this. Okay, so as an investor, since the March 30th date, we're waiting for news. They're out of battery cells. We want to know when they're going to get them back. So they have their first quarter earnings call and announced that revenue in the first quarter was $1 million. So again, prior to their announcement on their shortage of fuel cells, they were looking for $140 million of sales this year. So now they've talked to us and said, we did $1 million in the first quarter. That was not a shocker. We already knew they were out of fuel cells. What we're all waiting for is, where's the update? What's going on with the supply chain? When are you going to get the fuel cells? So in the meantime, on June 15th, they put out this press release. And I don't want to dwell on it, but I want to talk about it because a lot of people are down a lot of money on this stock. So we're waiting for some pertinent information. And here's the press release they put out. Romeo Power unveils a new logo and website as a part of extensive branding initiative. Okay, all right. You know what? Marketing's important. A couple sentences I'm going to read to you. Our mission is to power the world's transition to electrification. This is a part of our bold vision to create a world where energy poverty no longer exists. Okay, great. I think we're all on the same page. We all want to switch over to green energy, and we don't want anybody suffering energy poverty. I get it. Then the next paragraph. The new Romeo Power logo is the celebration of a current as it flows towards the possibility of a better future for all. It is also inspired by the center of a tree's wood core called heartwood. Heartwood is the fundamental supporting pillar of the tree, and it never decays or loses strength, in many ways, it's as strong as steel. And this feat of nature aligns perfectly with Romeo Power's internal values. Now, I am sorry. As an investor who's desperately waiting to hear what is going on with their supply chain, this is a very whimsical news release. It is a bit discouraging as an investor. If this is what management is focusing on, that makes me concerned. Okay? And again, I understand, updating your website is key. They want to go green. They want to brand themselves. That's all good. But this is getting a little out there for me. So, and again, this is all a distraction from the fact that it's now 2.5 months later and we've had no news at all on when they're going to get any fuel cells, which is the business that they're in. Okay, so this is literally the transcript of the press conference. The near-term challenge is the limited number of battery cells producing safe, high-performance cells suitable for the commercial electric vehicle market. We are attacking this problem head-on by broadening our engagement with battery cell providers. We are taking key strategic steps to reduce the risk over the medium and long term. Translation, no new information there at all. You will notice they say nothing about the short term. They say the medium term and the long term, and they say they're taking key strategic steps. So, okay, again, as an investor, not very comforting. We are driving a global and holistic strategy to secure our future. We have made significant progress since our last update towards adequate cell supplies. What? Okay, so we've made significant progress. What progress? So, totally generic statement again, not comforting as an investor. Okay, now some good news, sprinkled in with what may seem like a negative video, but believe it or not, I actually have some good hope for this company, which I will get to. Okay, so we now have $287 million of cash and cash equivalents and investments, having used about $5 million in the quarter, meaning the first quarter. So $287 million is a massive cash runway. And if you've watched any of my videos, that is a key indicator for me, because if a company doesn't have the cash to get to where they're going, they're not going to get there at all, or they're going to have to take on massive debt or massive dilution of the stock. So as a shareholder, none of those things are good news. So now you're looking at a company with $287 million in cash. Their burn rate is nowhere near that. That's a years and years supply of cash. So that is great news. Now, they've got a problem to solve, but they've got the cash to get themselves through that time period in order to solve their problem. But it is clear that at the moment, they have not solved this problem. The longer this goes on, the bigger the questions get. Having said that, I'm going to give you my thoughts on what I think can happen with this company. They are either going to, at some point, come to an agreement with a supplier, or as they talked about, multiple suppliers, and that would be best, because they certainly don't want to rely on go from 0 to 1 supplier. So, and they're working on that. They've said they're discussing several different options. So I think management's trying to construct a situation here where they have 2 or 3 or 4 suppliers, and they can start to meet the needs of the existing backlog and start to work on growing backlog. Now, they have $287 million of cash. That gives them some time to make that happen. If they can make that happen, this will turn back into the company that everybody thought it was before March 30th, when they announced that they ran out of fuel cells. So we've got this line at $17.04, which was the bottom of the trading range. Once it left that trading range, once it got below $17, it has not gotten back to $17 since then. So that is this blue rectangle right here. You will see that is now a neutral zone. It left there and it's never gotten back. There's another neutral zone right here. This red box right here, once it dropped below that, it started trading in a range between $10 and $15. Once it dropped out of that range right here, it has not been back there since. $10.87 is, kind of a 3-month high for the stock. It's been trading a lot closer to the $7 or $8 range ever since then. This is how I'm looking at this stock. And I know this was basically just an entire video of not great news or no news. So you may think that I have a negative viewpoint of this company, but I have some optimism that they're going to solve this problem. They have the cash and the time to solve the problem. I think this stock will pop back up to its old trading range. So what they need is a catalyst. And they can put out all the press releases they want. None of those are real catalysts. The press release they need to put out is, here's the agreement that we have. We now are back online. We are buying fuel cells. We are making batteries. And here's when we're going to start delivering our product. I don't have a crystal ball. I don't know when that's going to happen. So I have to call this a buy and hold. So for me, in the $7 or $8 range, and $6.38 is its low. It's its all-time low. So somewhere here in the $7, it's about $7 today. Somewhere in this range, if you're willing to take a risk and if you have time as an investor, I think there's very big upside potential to this company. Their sales could get right back on track. Their current projection is for $200 million of sales next year. So if they can find a way to stay on target for that, they'll be right back on track to where they were, and I see this stock potentially skyrocketing. However, it's a high risk because it could go the other way. So this is a risk-reward scenario. What I am doing with this, it's a long-term buy and hold. It could be 3 months, it could be 6 months, it could be a year before these guys get things back online. I would start to get nervous past 6 months. Personally, this is not financial advice. This is just how I'm looking at this stock. If they can't solve this, if they can't come up with at least a temporary patch for this problem in the next 3 to 6 months, then I will start to look at this a little bit differently. But for the time being, I'm willing to give them the benefit of the doubt and give myself the potential upside if and when they do fix their problem. So those are my thoughts on Romeo Power. Thanks for watching. Again, smash the like button, subscribe if you already haven't, and we will see you in the next video.